Friends, good afternoon and good to see all of you in large numbers. This is actually the last session on the pre budget series of the live budget expectations. Here, we spoke about the economists. We spoke to the economists and understood their expectations on the economy earlier. We also spoke to the NBFC leaders and insurance leaders in different segments every Wednesday. And this is, in fact, a last session where we have the bankers sharing us their expectations from the finance minister who's going to deliver a budget on the 1st of February this year. Uh, After the budget, obviously, we will have various sessions and try to decode what is there for the specifically on the BFSI sector. But I must tell you that we are living in an interesting and an unusual time. As you can see me wearing a sweater, which is a rare situation in Mumbai because there is a winter. On the other side, there is a funding winter as well, which is being faced by the fintechs and the startups. And a very unusual aspect which is happening in the economy is all the global rating agencies, whether it's IMF or the World Bank or many other the top agencies, are betting really high on India and projecting a great roadmap for the India going ahead. In fact, there are few rating agencies who has also said that India can become the third largest economy in a 7 to 10 years time going ahead. Considering all these factors, it's very important to understand what is the direction that the government take going ahead, whether they look at normal economy, green economy, blue economy to shape up the India in a far more meaningful manner is what we are going to expect and we are going to learn. So, ladies and gentlemen, I have with me three top speakers from the banking industry telling us what is that they expect from the finance minister and what is that, in fact, the finance minister should keep in mind while delivering a budget, which will actually help not only the bankers but the economy as a whole. And allow me to introduce you to the best minds that I have with me. My first speaker is Mr. Sunil Mehta, a former CEO of Punjab National Bank, a veteran name in the banking industry, and who's currently heading Indian Banks Association as a CEO. Mr. Mehta, glad to have you.
Thank you. Thank you, Amol.
Thank you. My next speaker is Mr. Ajay Kanwal, MD and CEO, Jana Small Finance Bank. Mr. Kanwal, glad to have you. And my next speaker is Mr. Manish Kothari, President and Head of Commercial Banking, Kotak Mahindra Bank. Manishji, glad to have you.
Yeah, thank you. Thank you, Amol.
So thank you. So let's begin, gentlemen. Before that, readers and viewers, you are watching this show on any platform, whether it's Facebook, Twitter, LinkedIn, YouTube, or etbfsi.com. If you have any questions, please share it with us. So, Mehta sir, Kanwal sir, and Kothari sir, I have a very basic question to all of you. To begin with, what are your budget expectations? And Mr. Mehta, I will start with you.
Well, everybody is thinking that the economy growth is the priority of the government and all the stakeholders. Somehow, the growth in private sector capex is still muted. It's not to the level that is expected, which can drive the economy. And then government can take lead by creating a bigger pie for the capex. So, government has already a very big national infrastructure pipeline. They can make a greater allocation for completion of the existing infrastructure project as well as the new infrastructure project. Then it's not only the central government, it's the state government as well as the public sector undertakings. If they can be encouraged and through the instruments of the state by incentivizing them, then that can really increase the capex by public sector undertakings, by government and by state governments, which will provide a growth. That is one area. Another important area which I feel is the agriculture. Agriculture is one area where the farmers are getting interest subvention and relief on their working capital loans. That is in the form of Kisan credit card, which we get the KCC loans. So that KCC loans are basically of the nature of a working capital, and that is being incentivized in terms of the subsidies. But there is no incentive scheme available right now for capital expenditure in the farm sector. So if some such a scheme can be introduced by this budget, so this will have a multiplying effect, because if the capex goes up in agriculture, of course the demand for working capital will also come up, and that will help the even country in fighting with the food inflation also, and with maybe in the present geopolitical situation, that will provide a fillip. The second important area which now everybody is talking about is ESG framework, where everybody is talking about climate changes. So the green financing is a very important area, and funding of the maybe green energy and green infrastructure project, if that can be incentivized through the budgetary tools, maybe in the form of either capital subsidies or the interest subsidies, and that will really provide a double engine growth. One is in the area of climate improvement, another in the area of, and you know pretty well that our Prime Minister has already declared in the Paris that we want to be carbon neutral by 2070, and maybe more than 50% of our energy may come from the green sources by 2029. So I think all these milestones, 2030, so all these milestones will require some budgetary push so that the green financing is incentivized and it can be a source. So these are the major expectations from the budget. Besides this, there are certain industry-specific expectations which you have said that maybe the government can consider incentivize the digital lending, also the digital payments, the way they have encouraged the digital payment and they have subsidized the transaction. Same way, if the banking sector can be given some incentive in the form of, if capex, suppose they make a investment in the form of capex into creating the digital infrastructure, and some tax reliefs and tax offs are provided to it, that will facilitate a better the ease of doing banking for the masses. That will help a growth in the economy, and that will facilitate the banking industry to bring out with the faster technical solutions, because it is being incentivized by the government. So these are few of the major expectations which, as a banking industry, we have from the budget, and I hope few of things may be considered by the government.
Oh, sure. I think major highlights. I think thank you for sharing that, Mr. Mehta. Let me come to you, Ajay sir, and learn from you in terms of your expectations.
So, Amol, I feel the World Cup is just over, so our score is 2-1. It's halftime.
Okay.
And we know that we are going to win the match. We have to decide what is the quantum of the lead. We want to finish 3-1 or 4-1 is our choice. And that is his budget, I feel. So first about the score 2-1. The first goal or the first positive thing in our favor really is the domestic consumption. The domestic consumption has been strong post-COVID, remains resilient. And any large consumption market is a very attractive market, both for manufacturers, onshore as well as offshore. So I think one thing which the budget should do and certainly should take care of is to make sure consumption is driven. Variety of methods from tax, etc., etc. So I think that's the first goal in our favor. I think second is you look across the world, there is talks of technical recession, slowdowns, uncertainty, geopolitical events, etc. So obviously, like you mentioned in the start itself, that most people are looking in India, which makes us an attractive investment destination. There is certainly a China plus one thinking in a lot of MNC's mind. We've seen the move happening. We'll see more of that happening. We should absolutely capitalize on that in addition to PLI. And we should make sure that this India being a choice destination for the next few years, we kind of firmly rooted in the international arena, both in investors as well as manufacturers or service providers. So that's the two positive where we have scored, and I feel we are ahead. The one against us is inflation. But like I said, we are going to win because we cannot take inflation and move backwards. We have to figure out a way of sustaining inflation,
Right.
hoping the supply side picks up, doing a few things to address inflation, but not let inflation change the mood and the tempo that we have, that this game is in our favor. We are going to win this match. Now we have to decide the amount of score. So really my expectation is on the growth side. We can get to specifics as we speak. Second really is it should address us being a choice destination both for onshore and offshore investors and manufacturers as it would be. And third is keeping an eye on inflation, but not letting it bother us.
Sure. I think inflation is a major worry, not for us, but not only for us, but for the whole world, and that is going to the major indicator for sure. So no doubt about it. So Manishji, let me come to you and take your opening remarks perspective.
Yeah, so I guess Sunil and Ajay anyway talked about quite a few things. In my view, if I were to use simple English, the government's task in theory is pretty easy: manage fiscal deficit, manage the current account deficit, manage the inflation, but still get growth. So, but easier said than done. So there are three, four areas possibly in my mind uh, which I'm thinking of as we are talking. Of course, one Ajay alluded to, which is ensure that the consumption demand continues. India is a large domestic consumption story, so that continues. There, I would want maybe go a little granular to say that a financial inclusion for socio-economic empowerment, because that's where a very large mass sits. And whether it is in terms of agriculture, which Sunil talked about, or from the point of view of rural, or MSMEs, which in terms which form a very large percentage of in terms of companies which provide end up providing employment, or uh, is a space where we need measures which can really boost financial inclusion. And it could be uh, from the perspective of boosting agriculture income, whether it is in terms of how do you improve crop yields, how do you improve more credit in the hands of farmers, but how exactly that gets used, I guess that is an equally important piece in terms of providing them support on supply chain or improving crop yield efficiency. Similarly, fintechs, while we talked about fintechs as in from the point of view of using digital on lending, which Sunil talked about, the important piece, it could be far more again focused from the point of view of serving the micro enterprises or the farmers in a specific way. Yeah. So, is there a way in which one could provide them support or incentivize them, the fintechs, which are really creating inclusion at the most bottommost level, which ensures that the consumption demand of a very large segment continues. The second piece in my mind, of course, was boosting exports, uh, which is again Make in India, PLI schemes, expanding the scheme, or how do you ensure that we get more FDI into the country, and specifically supporting again MSME becomes a very critical play even from an exports point of view, because almost 45-50% of the exports are supported by MSMEs. And hence there is merit in seeing that, okay, what could we really do to continue to provide them support, whether it is in terms of providing them the interest equalization subsidy or remission of duties, taxes, but more importantly bringing them providing them support from the point of view of maybe promotion councils, which can provide them support on how can they go overseas in terms of marketing or managing their trademarks, compliances, etc., etc. So that was the second piece. And third, of course, was with respect to continuing the investments in capex, which is largely was kind of taken care of by the government over the last 2 years. That's a piece which I would expect the government to kind of continue to provide support in terms of the infrastructure space specifically, because that kind of oils the entire economy in a way. When you have better roads, better ports, better highways, and the overall railways and the logistics piece in terms of costs become much better, I guess that's a space where I would expect government to kind of not really rein in from managing the fiscal deficit, but continue the capex spend there. So that's the broad
Right.
theme in my mind.
No, sure. I think we'll discuss in a little detail about the capex plans and whether the government can do something there, because that's what is India Inc. looking for. But let me bring back Mr. Mehta here, and Sunil sir, please now tell us. Obviously, we understand national infrastructure pipeline, agriculture, ESG, and also the green finance areas that you mentioned some time back. Apart from that, what is it that the government should do specifically for the PSU banks in your own thinking and observations? And also, if you could tell us what are the asks that the IBA has specifically from the finance minister.
So, like as I said, for PSBs as a whole, government, if they encourage infrastructure into the PSB space also, because they're all marketing companies, they're all export companies, and India become you make more capex and become more self-reliant. The way US has developed the self-sufficiency into the oil production, because yes, green energy will replace the oil, but it will take time. And meantime, if we can augment our oil exploration as well as so that is one area which can really done in the PSU space and can really help in the economy. Another important area where like all these discoms and all these electricity generation companies, majority of them are into the public sector space. So there, if we go for green energy and we incentivize that system of the capex, this can provide a multiple advantage. One of the thing is climate changes, like we replace from the existing old coal-based plant to replace it with the new green plants where energy efficiencies are there, which reduces the consumption of fossil fuel and goes for maybe solar energy, maybe wind energy, maybe alternative sources of energy, which can save the cost, improve the efficiency, and as well as environment friendly. So that is another area which through PSUs it can done. As regards PSBs and the other banking sector, I said this incentivizing the investment into the IT space, especially for digital lending. That is one area where the way the budgetary allocations were made for digital transactions. So subsidy is given for digital transaction for those who are performing it. Same way, if something can be done for the digital lending also, that can provide some fillip to the industry in adopting the digital lending models quickly, which will facilitate. So these are the major perspective from the public sector point of view. And another thing, the moment you incentivize the green energy, automatically these PSUs and the others will come forward for transformation from the existing coal-based to the solar-based or other models. So that will create a new employment generation, that will create a growth, and definitely this will have a multi-pronged approach for improving the employment as well as the environment conservation.
Sure, quite meaningful. Ajayji, let me come back to you. And when we look at largely government's narration is always viewing towards SMEs and MSMEs, and we always hear that they should, the industry or the government should do more for the SMEs and MSMEs. You are catering to this particular segment, and you must be, talking to these people a lot. We understand that the government offered a sovereign guarantee specifically for the ECLGS, and many SMEs and MSMEs could survive. So narration is there. But when you speak to such people on the ground, specifically from this category, what are the major challenges that you think can be solved by the government? Because for them, credit access is still a major challenge. For them, ease of doing business is still a major challenge. For them, trade and export is still a major challenge. So anything that you think in that area which government can do?
So thanks, Amal. Amal, two things. One is, see, the MSME challenge really is they find difficulty in accessing credit because they're not very formalized in their own financials. So it makes difficult for banks to take the risk. And so a lot of it goes to assessment. Having seen the success of ECLGS, I think some form of ECLGS, which will give support to the banks to continue focusing on MSMEs, because the issue is not about banks not lending to SMEs, it's the amount of risk appetite that you may have in understanding the borrower. Now, if there is some additional support coming there, it will certainly make a difference. As of now, certainly people who are dependent on imports have suffered a bit. There is rising inflation, so input costs have gone up. As you know, MSMEs have no pricing power because the big companies have pricing power and the customers have pricing power. The guy squeezed in the middle is obviously the MSMEs. So any amount of refinance help in terms of pricing that we can give them will reduce some of their burden on cost. So really, if you ask me on MSMEs, there's enough and more banks' interest. I mean, every bank wants to do MSME business. It's part of priority sector. It's a very good business for all of us. Yet not enough credit. So I think the real challenge is the risk assessment and availability. If the government can continue ECLGS in a smaller format, that will help. And secondly, if we can give them some help during this inflation moment on reduction of input cost, which in our case can only be interest cost. The other piece I must mention, since Manish did speak of financial inclusion, is on housing. I think the whole piece, and we work a lot, Amol, on housing. Affordable housing, clearly a very important space, promotes consumption, because obviously to fix the houses you need lots of raw materials and all kinds of people, workers, whether plumbers, carpenters, and the rest. It's a good way of generating employment throughout rural and urban India. I think one thing the government can do in the budget is to bring back the CLSS scheme, which is under the Pradhan Mantri Awas Yojana. They've withdrawn the scheme on 31st of March, where you do give credit to basically the EWS or LIG segment for a 300 to 600 square feet build up. It goes up to 6 lakh rupees. But what it does is it does create, and it's either to buy a house or you build an extra room or you actually do some work with your roofing, etc. I think we need very broad schemes where the government is the enabler and everybody is motivated to it. Because if we start building lakhs of homes, that's lakhs of jobs in the unorganized sector across the length and the breadth of the country. And I think one of those schemes will make a big difference, like a CLSS.
Hmm.
I think the
Uh,
other piece, which is not linked to your question, but I do think, since it is like, what would when I'm seeing, I think, health insurance, I think coming out of COVID, I think we all can do more of that. Maybe if the ATD can allow more health insurance premiums, the reduction will help.
right.
And I think it'll work in both ways. It's less of a income generating tool, but given that health is such an important piece and we've all seen it,
Hmm.
it may help if we can really look at health insurance deductions going up and promoting health insurance as a real need across various segments.
Right. I
Maybe
think that.
maybe an added piece, if I may,
Sure.
maybe an added piece,
Yeah.
just adding to what Ajay mentioned
Hmm.
in terms of specifically the micro enterprises, which effectively are the ones which do not really get the financing because banks find it difficult to do that assessment.
Hmm.
I guess a lot of digital lending companies which are really coming in, if there is, while the banks could look at co-lending, but
Huh.
maybe some kind of a support from the government from the point of, like Ajay mentioned, in terms of supporting from a credit guarantee point of view, can help banks also. These are the companies which are acting as a bridge. You reach out to a lot of these micro enterprises or a lot of agri-tech companies which are kind of becoming the go-between the farmer and say the organized consumer or the business. One could look to finance the end consumer or the say a farmer here, if there is that added degree of comfort which could possibly get built in, because there is some degree of formalization that is happening through the fintech or the agri-tech. Just an added thought.
No, sure. Noted your points, and I think that is a reasonable ask on the health insurance side, Ajay ji. That the insurance industry has been asking, because the limit is the same, and in fact, the GST has also been added there with a higher bracket. So very valid point. So Manish ji, and I will take your view specifically on the wholesale side of the banking, and we'll take this question with Sunil ji also a little later. Since we mentioned about the capex, which is not coming up very aggressively, though we have a strong credit growth, what is it that you think, Maniji, that the government should do specifically to maybe cheer up India Inc. so that they will go for a huge capex? It's not that they don't want to, but they're still going little slow. And I don't think only inflation or interest rates are the reasons, because there was a time when interest rates were the lowest in the industry or in the decades, right? So, what do you think the government should do to cheer up India Inc.?
A couple of things come to my mind. I guess it could. One is, I guess it needs to be more sector specific support that the government will need to think of, like the PLI schemes. When I said that one could look to possibly expand, it is to see which are the sectors which could really add to making India more self-reliant, if I may use the word. So wherever sectors where there are a lot of imports which currently happen, say significant chemicals, or the pharma companies end up procuring a lot of chemicals. If one wants to ensure that we reduce the level of imports and make India more self-reliant, I guess the government could pick up and choose specific areas where it will eventually end up making India more self-reliant, whether it is in terms of specific industries like chemical, etc., or even from the point of view of fueling what one is wanting to build, say from the point of view of infrastructure, that what are the support schemes that you can really build to provide long-term financing. Yeah, Sunil talked about NIIF or a NAPFIN, which is being created specifically to provide long-term financing. I guess those are the pieces which can definitely help. Bank balance sheets are looking good, corporates balance sheets are looking good. I guess it's about kind of inflection point where some extra boost can really make the tipping point happen, from the perspective of additional capex or spending really going in from the private sector.
Well,
Yes, yes.
supplementing what Manish said, I'll just quote an example. Like even Indian banking system, we were having an acute shortage of chips for this card, and even the existing vendors were not in a position to supply the chips. So the reason is because they were all imported from Taiwan and the countries, and we were not having domestic. So maybe if such type of PLIs can be brought in for such type of sector, and we encourage some partners to come and pursue, so that can be driven maybe in the form of either capital subsidy or in form of certain PLIs. Then definitely such sectors which can make the India more self-reliant on these things, and will give a fillip to other industries which are associated with it. Similarly, like vehicles were also having a lot of traction in this, and you know that now a survey says India is the third largest country which for consumption of this automobiles like four-wheelers and car manufacturers. So when India has become a third largest consumer, we need more of it. And instead of importing, if we can incentivize through PLI and through budget and create these facilities within country, that can facilitate the self-reliance on these areas.
Sure, sure. Sunilji, do you also want to add in terms of large corporates, focusing specifically on the capex? Is there anything that the government should do specifically for them in terms of ease of doing business? Because I think when we look at the whole narration, there is a greater positivity right now than we ever had. So how should, in fact, government, catch this opportunity to maybe to cheer up the India Inc.'s large corporates so that they will come and, invest heavily?
So two, three things. One thing is like it's not only budgetary.
Right.
There are certain environmental enablers that may be needed to cheer up the industry. One of the enabler and which the government is already working on is decriminalization of the something like the corporate corporate law, because everything if failure in a corporate sector or any mistake in the corporate sector, everything is criminalized. It's disincentivize corporates to go for a fresh expansion, because they know that the moment they default, the default can convert into a criminal liabilities, maybe in terms of investigations, in terms of others. So they start deleveraging instead of using more of the credit and actually going for a major capex expansion. So that's although outside the scope of the budget, but government can really work something to create a positive environment. That is one area. Another important area for creation of greater capex demand is investing in those sector which will push the private investment into the ancillary sector. Like ancillary sector will have to support the main sector. For example, if any automobile manufacturing units is created, then at least hundreds of ancillary units are created around it, and that gives that encourages the small capex also besides this measure. Similarly, for maybe like we do not have any big aviation, like India is one of the fastest growing sector wherever the people are going for utilization of the aviation services, and we don't have any manufacturing facilities for big size aircraft. And the smaller countries, they are doing it. So if we start working on those areas where we are having a substantial amount of imports, and our industry is expanding, and every year we are purchasing aircraft. If we can do something domestically which can support our manufacturing of these things here, maybe by tie up with the existing units, and that is what the government is doing. Like for Apple, they have done it. Similarly, can be done for the aviation industry, because the market is growing, and with the Udan scheme and smaller areas, this may again go up. So these areas, if you create, it will automatically propel demand for the other area, because people find this becomes a very good business proposition. So these are the ways that can be incentivized through these government enabler, and which can help the capex in this area.
Hmm. Sure, I think uh, we partly discussed expectations part in this. There are two, three questions. So, uh, Ajayji, I want you to take this question if you can. This question is, in fact, Sunilji partly mentioned about the green energy and the renewable energy, but this question is specifically about the new growth areas which government should focus on. So, according to you, which are the new growth areas of business which government should keep focus on?
So, Amal, my bias normally is to focus on employment generation being the highest. So, I think
Right.
one simple one is
Hmm.
tourism, for example.
Hmm.
I
Hmm.
think the amount of job growth,
Hmm.
the amount of exposure we can give rural areas,
Hmm.
the amount of push we can do. So, I think declaring tourism industry as a low tax industry, for example,
Right.
and really propelling a massive amount of investment, and which will all go to the hinterland for sure. Uh, and
Hmm.
we'll all go in pushing infrastructure because you really can't reach a destination if you don't have the
Hmm.
infra to get there. I think tourism would certainly strike me as one.
Right. Right.
Sunilji did mention aviation, and I think that's got a lot of legs, and that goes right from the drone business to what we should, and for example, you go to any international market, $50 to $100 chopper ride is possible, yeah.
Right.
uh, right? And given our size of affluence and population, it should very
Hmm.
much be something that we can easily adopt in India, which just tells you the size of the aviation industry can be very large if
Hmm.
you just allow that to grow. I'm just use chopper as a simple example because cities are so crowded. An easy
Yes.
way to kind of get across if you can really build a scalability of the business. So I
Hmm.
think what Surilji mentioned, I think I would put aviation as another.
Hmm.
I would still think, we spoke about PLI. I think maybe we should have a special economic zone, a special law zone, because a lot of chat around investment is around, some rules and regulation, whether it's sometimes it's emissions, sometimes it is pollution, sometimes it's labor, or a mix of there. I think that's probably the elephant in the room saying, I think not all manufacturing will come at zero risk
Hmm.
or doing what we need to do in an ideal situation. And I
Right.
think somewhere we'll have to just step back and have that look. Saying if you really want to develop some of those districts where the economic growth hasn't reached so far and would like to prop it up, maybe we have special law zones which allow manufacturing to come up
Right.
with slightly easier rules where people are very comfortable saying, yes, we have the money, we have the market, but we just needed that push for comfort, saying we are not trapping on three different laws which can put us in a different position. I think
Hmm.
that's the kind of conversation we have to kind of kill, I feel. And that will be the factor, I feel, which is really lift it up.
Hmm.
But those are the two big sectors which do strike me. See, sitting in a small finance bank, I can see there is a lot of demand of credit on the low end side of small ticket. And to Manish's point and what Sunilji made earlier, treating digital lending as a preferential product piece or a differential industry piece, certainly for the smaller tickets, well, within banks or outside banks, it doesn't matter. We are trying to address issue for the country. I think that will make a big difference. I think just picking that up, being saying small ticket lending across the country, doesn't matter
Hmm.
which institution, NBFC or a bank or a fintech. I think that will be a industry to really work on.
Hmm. Yeah, I think quite remarkable and valuable points. And specifically, tourism, I personally feel that has a greater scope in India, considering in the demography and every state is different, every city is different. I think greater scope there. Thanks for adding that. Manisha, I want you to take this question specifically on the credit demand. So the question is, what will actually boost the credit demand going ahead from the corporate side? We partly discussed, but this is a little specific, and maybe you can share your experience. What are you listening from the top corporates whom you meet these days?
So, see, I think the corporates will look to invest. It is not about the capacity utilizations are looking reasonably good, if I may say, closer to 70% odd. where usually most corporates start to look to invest, yeah, in most industries. So it is not about and it is not about interest rates either. I don't think interest rates right now are reasonably okay. It is not something where it is, yes, if it dramatically changes, it can kill investment demand. But otherwise, right now, interest rates also seem okay. So it is the larger piece, which is what I guess corporates are waiting and watching, which is, will the consumption demand really hold? Yeah, so that's the bother which one gets to hear, that will the consumption demand really hold, and hence, how much of a bite size do you really end up taking? And in my view, if we are kind of addressing some of the basics, the corporates will come in. So, like I alluding to a couple of things which came to my mind was, say, a logistics infrastructure that becomes such a critical piece in terms of ensuring that, when somebody is looking to compete in the international market, I guess logistics costs in India is a very large element. Whether it is even tourism or things which we are wanting to go out and build, the infrastructure that you have within the country makes a huge difference in terms of, if there are good roads and tourism gets a boost, buses will sell, right? So some of those things will automatically happen. And to an aside, not necessarily from a sectoral point of view, things like improving skills. We talk about demographic dividend, which India really has a huge young population, but are the skills needed by the corporate sector, manufacturing sector really available in plenty? That's a space where possibly government could play a role. Yeah, because it's a very large impact item across the board. Similarly, women empowerment, right? India has such a large women population, and how do you get that population to really contribute in a productive manner? So that's an area which, again, diversity is being talked about. Work from home. There are ways and means to really, promote girl education or ensuring their career progress. So all of those need to be addressed by the government. My sense is corporates will come in. See, the what do you call, the entrepreneurs are looking, will capitalize on opportunities. I don't think that when the risk return equation tilts a bit, the animal spirits haven't died. Yeah, so they are still there. So people will come in droves in terms of ensuring that investments happen. My guess is it's more about positivity, which one gets to see for some more time. I believe that investments would happen.
No, sure. Noted your points. Sunilji, I will continue with my second question, which was specifically about the PSUs. So, on a broader level, do you think that the government should look at these aspects of IBC, the bad loan part, which was again IBC's suggestion, which came into picture, but again not picked up to the aggressive level. That is one. Second is, they also did a great ambitious plan of divesting the LIC stake, but they were also looking at other Navaratna and Maharatna companies also to divestment. So one, on that front, IBC, NCLAT appointments are not happening. Do you think that the government should seriously now put a specific focus? Because I mean, fortunately, in last 2 years, the major bad loans didn't turn up, but still there are pending cases over there. So on that front, what government should do, and anything on the divestment part that you see specifically, which government may look at?
No, Amol, that's a very valid thing, and I think government has a very huge disinvestment plan. They are already working on it, because that disinvestment plan is basically will have twofold advantages. One thing is like when you disinvest, you convert more private equity participation, and that creates a more efficiency into the public sector space. That is one area. Another important aspect is government get resources for capex. Like if they go for disinvestment, then they can go for fresh investment into the new projects, and that will provide them then the advantage. So disinvestment is a well thought of strategy. It's a two-way advantage. One thing is like people say that government has no business to be in business, so they say that let's reduce our footprints into the business and go for more fresh capacity investment where the new sectors are needed, and new sectors which may not find much favor with the private sector, but government can take lead and then private sector can follow. So this is one. Another important aspect you talked about is IBC. So for IBC, I think recently I was a member of that collegium also, where we have presented the bankers' perspective, and the FM Herschel participated, NCLT heads and NCLT heads, they were there, and we all brainstorm what need to be done to make IBC more effective. Because IBC is not only for not only for recovery, it is basically for sustenance of the existing corporate. Like basically how to keep the corporates as a going concern, and convenience of exit also. Like suppose you think that my project has failed, so how can respectfully I can get out of that the corporate and move ahead and go to the insolvency regime. So a lot of suggestions have been given, including like as an IBA body, we have said that the pre-pack arrangement, which is now available for MSME sector, but MSME sector has not used it much because they got a window of emergency line of credit, they got a window of restructuring window from the regulator, so they have not gone much for availing the pre-pack. And I think the concept has also not drilled down to the field level for adoption. But same thing that can be introduced for the corporate sector also. So if the government comes out with the reforms and IBC and they provide pre-pack, so there can be two type of failures. Like there are people with malafide, those who have diverted intentionally, have siphoned the money from the system, so they can be dealt separately. But there can be genuine business problems also, like especially in pandemic. Many of the good hotels, they could not get revenues for 2 years, and just because of 2 years they could not get much revenue. The moratorium was there only for a period of 6 months, but many of them have suffered problems and defaulted because they could not come out with. Although we came out with the emergency line of credit, but somewhere there were mismatches, and the hotel and the hospitality sector has really suffered during pandemic. Now I think post pandemic they are bouncing back. So if these such type of failures are there, which are beyond the control of the promoter, why can't we support them through the pre-pack arrangement? Like we can have a restructuring arrangement within the framework of IBC, where they can get a stamping from the IBC that they don't any operational creditor or a small lender do not is not in a position to take them to the IBC, and a sustainable restructuring plan can be developed by the banking sector with the, of course, with the support of the existing management and support of the NCLT code. So these new changes will definitely facilitate in the corporate sector in retaining their existing asset, as well as finding the solutions to keep it as a going concern. Even bankers will have a lesser haircut, because sometimes in insolvency the bankers have to take haircut up to the 95%. So what is a haircut? It's a body cut. Like 95% if you are shelling out, so what is left? It's just 5%, which is not even the interest cost of 1 year. So my limited point in saying is some changes are needed, because just by going to IBC and getting such a low liquidations value, if we make out certain arrangement outside the IBC within the framework of IBC that is pre-packed, then that can really become. Then certain other suggestions have also been given to make it more effective. Like how do the lenders can have a better supervision and control post liquidation? Because once it becomes a liquidation, then the official liquidator takes the control of the entire thing, and COC doesn't have any major role in the post liquidation area. So there are a lot of such areas where the, as an industry body, in due consultation with all our bankers, we have given suggestions to the IBBI, and I think government, it's under consideration of the government for next level of reform. I must appreciate that this has been driven by the Prime Minister office itself. They have brought all these stakeholders at one collegium, and then everybody deliberated on these issues, and that shows the intention of the government to bring this reform. How soon it comes, that let's see it.
I'm sure, though you are heading Indian Bankers Association, the banker in you is actually talking, who dealt with all these bad loans and the issues that you faced. And thank you for making that haircut point. And there were only few bankers actually resisted when we talk about specifically Videocon like case, where 99% haircut was been accepted by a few couple of them. So thank you, in fact, for sharing that point, and let's expect biggest reforms in that era. So I think time is almost up, and there are a couple of questions, but I think we partly covered them. So let me come to my last question, and I would like you to spend maybe 30-40 seconds on this, and as quick as possible. And I will start with you, Ajayji. The last and the common question for all of you is, what is it that you don't want finance minister to speak about? What is it that you don't expect from the budget?
Easy ones, increase in tax rate for sure, of any sort, any form across
Yeah.
a spectrum from investment in shares to personal income tax,
Right.
subsidies. Uh, and I don't expect it, the finance bill not to talk about defense, not to talk about PLI, and certainly I think it will be a budget which will address a larger population and going positive on consumption.
Sure. Manish ji?
Yeah, so Ajay kind of shared the point, which is the common thought which would occur, that no tinkering on the tax rates on the in terms
Right.
of an increase, but definitely reining in the fiscal deficit below the, at least get it below the 6% mark. That's a good sign to give.
Hmm. Sure. Sunil ji?
Last time, like in budget, they announced that even on compromise, whatsoever is a loss, that is treated as a perk and TDS to be there. So such type of tinkering in the law we don't expect, because ultimately we represent to the government and they reversed it. But sometimes something which totally derail the existing infrastructure of the banking system for taking lending and compromise decisions. So we don't expect any such changes in this budget.
Oh, sure. I think quite meaningful one. So no one is expecting any policy shocks for sure. Let's have a smooth, seamless budget, which will take the country forward for sure. And that's what the whole country is expecting on the 1st February. Thank you so much, Sunil ji, Ajay ji, and Manish ji, for sharing a remarkable and realistic perspective here at etbfsi.com, and giving us time to learn from you. Thank you so much once again for your time. And thank you so much, ladies and gentlemen, for tuning into etbfsi.com's pre-budget live series. Thank you so much.
Thank you,
Thank
Amit.
Thank you.
you.
Thank
Thanks,
you.
Sunil. Bye, Manish. See you all.
Thank you. Yes.
Thank you. Thank
Yeah.
you. See you.
Thank
See
you,
you
Sunil.
soon.
Thank you,
Thank you
Ajay.
so
Thank you.
much.